Let's talk about what all this means for the markets at this point. We want to bring in Megan Horneman. She's Verdence Capital Advisors Chief Investment Officer. Megan, it's good to see you here. So just first, your reaction to what we just heard from Powell. And I think pretty much, at least from what the market is saying, a lot of this, we're seeing slight losses, but a lot of this seemed to be priced in.
I don't think there was any really big surprises from what he said. I think that everybody had expected that he would come in with a 25 basis point rate hike and then a hawkish tone in the press conference. But I think the markets still are mispricing and a little too optimistic, especially the bond market, on what the Fed's going to do. I mean, he was very, very clear that they're going to look at their dual mandate and they'll be data dependent. But let's remember what their dual mandate is. And one of them is inflation. And inflation is still too high. He repeatedly said he wants to get that inflation down to the 2% target. And if you look at estimates, it doesn't look like we're going to be down to 2% until the end of next year. So looking at the Fed being able to cut rates this year, I think is still very optimistic. I think the bond market can reprice to reflect that they're going to stay on, that they're going to pause, and they might have to eventually maybe go again.
Megan, do you think the Fed got it right in this meeting? There had been talk. The general consensus going into this meeting was that there would be another increase. The expectation, generally speaking, was what happened. Do you think the Fed got it right? Or do you think the whispers, the urgings from some voices that there should have been a pause at this meeting? What's your take?
No, I think what they did was right. 25 basis points is necessary. It's warranted. And I actually think their statement and even the press conference, I think he did that very well. He was pretty hawkish. I think some people are looking beyond some of the comments. But if you can go back and just look at how many times he said high inflation, unemployment rate is low, their dual mandate, all of these things that are still out there and risks to the economy, they made it very clear that they're not going to look at what's going on necessarily in the banking system, even though he started the press conference with reiterating that it is sound and it's improved. They're also not talking about the debt ceiling risks. All they're focusing on is unemployment and inflation. They made that very clear.
Megan, what is your assessment about what's going on within the banking system and how worried investors should be about some of the losses that we've seen there this week?
Yeah, I think that what's going on in the banking system is not over yet. That is a concern that we have. We do think what JP Morgan did was that, I think it has helped to some degree, but I don't think it's necessarily over. I would not rule out some more consolidation in that market. And the one thing that I think we can take out of what Fed Powell said in his initial remarks, and then when he was questioned about it, is that be aware there's going to be more regulation, and that is not good for banks. So I think that this is something I don't think is completely we're out of the woods just because of what's happened this week.
So, Megan, to go further on that point, so he did say that conditions have improved in the banking sector in the statement. And then he went on to acknowledge that mistakes had been made there, especially when you saw that postmortem that came out about SVB and where the failures were with regard to the Fed. Do you think that Powell and the rest of the committee are seeing that right with regard to stability? I mean, because right now I hear you saying something different.
Yeah, they came out with a statement, and it was a little surprising that was the first statement they came out in their press conference. It was almost like they were trying to reassure the market, although they may be a little bit concerned. There may be, when we get the Fed minutes, some more concern from other committee members. I think that what we're going to see is they're going to learn from their lessons. This is typically how things happen, and they're going to come in. And what we do tend to see in situations like this is, like I said, regulation and sometimes even over-regulation to repair those mistakes that they made.
And Megan, are you seeing a recession still in the cards for this year?
Yes, most likely, unfortunately. They've made it very clear that they will sacrifice growth to get inflation under control. And what we're seeing from many different economic indicators is that a recession is likely. We still lean in the camp that this is going to be a short and shallow recession, but also remember that recessions are warranted. They're part of every long-term investment cycle, and they're there to clear out excesses. And we have really created a lot of excesses after the pandemic that need to be cleared out so that we can look forward to long-term viability of the economy, as well as what we think can set us up for the next multi-year bull market in equities.
Megan, what about some of the comments that Powell made on the debt ceiling? He said that it's important to raise the debt ceiling in a timely manner. We should not even be talking about a world in which the U.S. does not pay its bills. What are the implications there?
And I think if you look at the market reaction exactly when he said that, that's when the market turned lower. I think he made it very clear that this is something that has to be done. It was almost a little fearful in his voice, but and I think maybe a stern warning to Congress to get this done. The debt ceiling is a risk. This is a risk that comes up in the market every couple years. It gets a lot of headlines. It tends to create a lot of volatility. I don't think that we're not going to be able to get a deal done. We will get something done. It's just that it's going to go to the 11th hour like it typically does, and it'll be another source of volatility over the next 4 weeks.
Yeah, it always does. They always take it right to the edge of that cliff. All right, Megan Horneman, our thanks to you as usual.